The Disciplined Trader, the ultimate guide to building winning habits for consistent profits. A step-by-step blueprint for mastering trading psychology, strategy, and daily routine. Even if you're a complete beginner. Introduction: why most traders fail and how you can succeed. Trading attracts people because it promises freedom, wealth, and excitement. But the harsh reality is that 90% of traders lose money. Why? Because they focus on the wrong things, hunting for secret strategies, chasing quick profits, and ignoring the mental and habitual side of trading. This book is different. Instead of giving you another magic indicator, it will teach you how to think, act, and trade like a professional. Whether you trade stocks, forex, or crypto, the principles in this book will help you develop the discipline needed for long-term success. By the end, you'll have a complete system for controlling your emotions, the number one reason traders fail, creating a bulletproof trading routine, managing risk so you never blow up your account, sticking to a strategy without second-guessing yourself, improving consistently through journaling and review. Let's begin your journey to becoming a disciplined, profitable trader. Part 1. The Trader's Mindset: How to Think Like a Pro. Chapter 1. Why 90% of traders lose money and how to avoid their mistakes. Most beginners believe trading is about finding the perfect strategy. But the truth is, even a mediocre strategy with good discipline can make money, while the best strategy with poor habits will fail. The 5 biggest reasons traders fail. 1. No risk management. They risk too much per trade, e.g., 10% of their account. They don't use stop losses and hope losing trades will turn around. Result: a few bad trades wipe them out. 2. Trading based on emotions. Fear: closing winning trades too early. Greed: holding losers too long, hoping for a comeback. Revenge: trying to get back losses by taking impulsive trades. 3. Overtrading, the silent killer. Taking low-quality setups just because they're bored. Ignoring their strategy because this time feels different. 4. Switching strategies. Too often, they try a strategy, lose a few times, and jump to a new one. They never master anything because they're always changing. 5. Lack of patience. They want profits now, so they force trades instead of waiting for the best opportunities. How to avoid these mistakes. Risk only 1 to 2% of your account per trade. Follow a trading plan. We'll build one later. Accept that losses are normal. Even the best traders lose 40 to 60% of the time. Chapter 2. The Winning Trader's Mindset. Successful traders don't have a secret. They just think differently. The 3 mental shifts you must make. 1. Trade to follow your rules, not to make money. If you focus only on profits, you'll break rules when emotions run high. Instead, focus on executing your strategy correctly. Profits will come over time. 2. Think in probabilities, not certainties. No trade is a sure thing. Even the best setups fail sometimes. Your job is to take trades with a statistical edge, not to predict the market. 3. Detach from money. Trade in percentages, not dollars. If you think, I just lost $500, you'll get emotional. Instead, think, I risked 1% of my account and the trade didn't work. Exercise. Daily mindset routine. Every morning, repeat these affirmations. I will follow my rules no matter what. Losses are part of trading. I accept them. I trade to execute well, not to get rich today. This trains your brain to stay disciplined. Part 2. Essential Habits for Success. Your Daily Trading Routine. Chapter 3. The Pre-Market Routine. How to Prepare Like a Pro. Amateurs wake up and jump into trades. Professionals prepare first. The 5-step pre-market checklist. 1. Check overnight news and economic calendar. Did any major news, earnings, Fed announcements, geopolitical events move the market? Websites. Forex Factory Economic Calendar. Bloomberg, CNBC. 2. Identify key support and resistance levels. Where did price bounce, reject recently? Draw horizontal lines on your chart to mark these zones. 3. Review your watch list. Which stocks Forex pairs? Crypto are near key levels. Example, if Bitcoin is near a major support level, watch for a bounce. Set your daily risk limit. Decide the max you'll lose today, e.g., I won't lose more than 3% of my account today. 5. Mental reset. 5-minute breathing exercise. Close your eyes, breathe deeply, and clear your mind. This prevents emotional trading later. Example, pre-market journal template. Date. Market trend. Up, down, sideways. Key levels. Support. Resistance. Today's setups. 1 dot, dot, dot. 2 dot, dot, dot. 3 dot, dot, dot. Or size. Risk limit. Max. Percent loss. Today. Chapter 4. Risk Management. How to protect your account. Rule number 1 in trading, never risk more than you can afford to lose. The 1 to 2% rule, non-negotiable. Never risk more than 1 to 2% of your account on a single trade. Example, if you have a $10,000 account, your max risk per trade is $100 to $200. How to calculate position size. Position size equals account risk percent divided by stop loss distance percent. Example, account $10,000. Risk per trade 1%, 100. Stop loss distance 5% away from entry. Position size equals $100 divided by 0.05 equals $2,000. This means you can buy $2,000 worth of the asset with a stop loss set 5% below entry. Common risk management mistakes. Moving stop losses. Further away. It'll come back. Averaging down, adding to losing trades. Risking more after a loss, revenge trading. Chapter 5. Trade Journaling. How to learn from every trade. Your trading journal is your best teacher. What to record in every trade. Date and time. Asset traded, e.g., BTC, TSLA, EUR/USD. Entry and exit price. Reason for entering. What was the setup? Emotions. Were you calm, nervous, greedy? Mistakes made. Did you break any rules? Screenshot of the chart. Weekly review. Questions. 1. What was my win rate this week? 2. Did I follow my trading plan? 3. What was my biggest mistake? 4. What can I improve next week? Free trading journal template. Google Sheets/Excel. Included in the appendix. Part 3. Strategy and execution. How to trade with confidence. Chapter 6. Finding a simple, profitable strategy. You don't need a complicated strategy, just a repeatable one. Example, the breakout strategy. 1. Setup. Price consolidates near a key level. Second entry. Buy when price breaks above resistance, with volume. Third, stop loss. Below the recent swing low. Take profit. At least 2 to 1 reward to risk ratio, e.g. if you risk $100, aim for $200 profit. Backtesting. Steps. 1. Pick 50 past trades where this setup occurred. 2. Calculate win rate